Per usual, living on this channel is for educational purposes only and is not intended as financial advice. Teaching Tech Tuesday, let's talk about another actionable signal within the Ichimoku cloud system. As a reminder, for me, my settings that I prefer that I've used for a decade, over a decade at this point, crypto side 2061 2030. This is default doubled and then adjusted slightly for 24/7 markets. Legacy settings, I just double the default. You don't have to use this, but it is my personal preference. All these signals are just as actionable with any settings, so keep that in mind. Higher time frames always win, so the daily signals should be extremely valuable relative to the hourly signals. The weekly signals extremely valuable relative to the 5-minute. Okay, so keep that in mind. And the checklist is always price relative to the cloud, bullish or bearish, the Kumo, color, the TK cross, bullish or bearish, and then lagging span I leave off of the chart completely because my settings are high enough on the data capture that I don't feel like I need another part of the checklist. But you can always add that as a fail-safe for any trade, or just leave it on there to see what happens if you're new to the cloud system. So we talked about Kumo breakouts, we talked about TK crisscross, talked about edge-to-edge trades. So this video I want to cover something we honestly haven't seen in a couple of years, which is a Kijun bounce specifically on a daily chart, which is where most of the meat on the bone is. A Kijun bounce. The Kijun itself, the red line, which I'll show in a second, is the mean reversion level, the 50% level of a previous range. So once you have a trend or a move within the trend and price finds a local top or local bottom, the cloud will hold that 50% level until momentum returns or momentum comes back to the Kijun. And you'll see what I mean by that in a second. Before we talk about the charts, let me mention today's video sponsor, Kraken Pro. Kraken Pro is a complete overhaul of the Kraken trading experience with a one-stop shop for advanced and professional traders. Kraken Pro enables efficient trading execution across multiple markets with a UI that allows for unique optimization tailored to your trading style. You can check out Kraken Pro with a link in the description of this video, and everything I'm going to talk about today you can pull up in Kraken Pro quite easily. If you want to add the cloud, you can just type in cloud. It'll populate there. And then for fractals, you can just type in WF, and those are the fractals I'm talking about. One other thing I'll mention on Kraken, they've added alerts on right click on the chart. So you just right click anywhere you want on the chart, set an alert at X level. In this case, if I want an alert at the Tenkin, I can set that alert at or below X level, plus or minus X%. It'll create the alert. And then it throws that in the alerts tab up here. And if you have the app on mobile, which is great because it sends you push notifications when those alerts are triggered. And then there's also a history section here that shows when those alerts were triggered. So super valuable if you're actually trading actively in the market. So for the charts, again, we've got the cloud. The Kumo is currently green. We're above the cloud. We've been above the cloud largely for the past 2 quarters now, barring a little dip earlier in January post ETF approval. This was GBTC unloading on us. Since then, the trend has been extremely fast. I'll get to this in the examples, but what you typically see is throughout any given trend, some eventual return to the mean, the red line, the Kijun, and then continuation. That is a healthy trend. The optimal entry within the trend is always going to be the 50% retracement. In Q4 last year, we held above the Tenkin. So this would be a Tenkin bounce. Now, depending on your settings, this will look slightly different. So again, 2061, 2030. And if you thought Q4 was quote unquote fast, the speed of the market was holding at the Tenkin, holding at the low time frame moving average. The Kijun represents like the 60 moving average, whereas the Tenkin is not exactly a moving average, but it is the 20. Okay. Fast forward to now, and since 43, relative to the daily time frame, we have just teleported very quickly to 70. So these settings, this time frame is going to have trouble figuring out what to do with this. Okay. And I'll get to how to navigate that in a second. But here in this moment today, year of our Lord, March 12th, 2024, the cloud is showing a TK disequilibrium here that is growing. And maybe more importantly, price is not only far above Kijun, the mean reversion level, it is far above the fast moving average, the Tenkan. Now, the ultimate question obviously is going to be, in the current market condition, with trillions of capital finally being able to access Bitcoin in an easy way, are we actually ever going to get a legitimate pullback in the beginning of a bull run? We can debate that, we can discuss that, but the cloud doesn't care, right? It's just telling you, here are the levels, guys and gals. And there's this yin yang between having a position that you think is an appropriate risk reward and or eventually taking some off and figuring out what to do at that point, right? So currently at this moment of time, the Tenkan is at 61.8, and the Kijun is at 55.6. If this market at this point in time retraced to 56, I think there would be calls for bull trend over, blah, blah, blah. But if you got filled at that level and we continued, which I think we will regardless, that would be a significant entry, right? Going forward in a bull market. So for people who are sitting on the sidelines thinking like, what do I do? Well, the cloud you can look at and say, okay, I put some on the Tenkan in bids. I put some on the Kijun, the red line in bids, and the rest I just DCA. And the DCA portion gets you into the market for conditions such as this when we are just above a 45-degree line, right? So at this point in time, it's hard to imagine that we will retrace to this level. Eventually, momentum slows, the moving averages catch up, the TK lines catch up, but that requires an extended period of time of sideways flat, right? So we're not quite there yet. So these may continue to move up a little bit, the Tenkan first, the blue line first. And you know you're always in trouble if you start to break below the Tenkan. You'll notice this whole time, last quarter, we did not break below the Tenkan. The reason I'm bringing this up today is because we are 30%, or we were 30% above the Kijun, which is pretty rare historically. We'll take a look at mathematically when else that has happened. But that's just another sign that we are bullish. We can maintain bullishness for a long period of time. Crypto loves to trend. But if I'm looking for levels, this is one way to do it. Are these levels ever going to get hit? I don't know. I don't care. So you can either use the daily, use the 12-hour, use the 8-hour, 4-hour, etc. But you certainly have to have some patience if you're looking for an entry like that at the Kijun. There's an indicator on TradingView called price versus Kijun. It even has the default 60 selected. And you'll see over the past couple of months, this is the highest we've been overbought relative to the Kijun. And so in a way, you can use this as an RSI. You can use this as a momentum indicator, overbought, oversold, standardizing it rather than just saying visually, this looks very far away from X level, right? So then it's a probability game. Do you think X based on Y? Do you think we can continue to push above 70 without the Kijun catching up? Do we need to consolidate? Those are all fine questions to ask. But again, the level's the level. The cloud doesn't care. But I do think it's important to think about, realistically, can we get to 56? I don't think so, right? I don't think many people would say yes to that question. But getting filled down there, you'd feel like a hero, just as the people who got filled at the Tenkan the other day felt like a hero, right, at 60. That was a 15% down day. We're not going to get to the Kijun in a day, most likely. So it's definitely a level to keep watching. Something else you can add to TradingView, it's called TKD. This you have to change the default 20 to 60. But this will show you the TK disequilibrium separation. So although we are farther above the Kijun than we were in early 2023, the TK lines in 2023 were actually separated more. So this is more of a C-clamp picture. That's when you know momentum is flattened out. And that's always a warning sign. So once you have weeks of flat Tenkan and Kijun, which we do not have now, then the calls for mean reversion become even more likely. So this may take weeks if it does roll over, right, to actually play out. Kijun at that point might be a little bit higher, but it's something to identify and watch very, very early on before the move down even happens, right? I mean, we're looking at this. It could take the rest of the month to show its true colors here and potentially roll over, even though I doubt that's actually going to happen because of the ETF inflows. Another question that I get and something to think about is, okay, if I want to buy the dip, but I'm all in, what do I do? How do I navigate that? This is where the trailing stop losses come in. This is where the Williams fractals come in. You can add those to the chart. You have to change the colors. I don't know why these are reversed. To me, the red candles are the resistance, the green are the support. That's just how I think of it. I'm specifically talking about these triangles here. So currently, the support fractal, the trailing stop loss fractal, is at 59, let's say. And that's sort of halfway in between the Tenkin and the Kijun. So your downside protection and re-entry kind of doesn't really make sense, right? So if we're ever at this point where you'd prefer higher downside protection, you'd prefer a better trailing stop loss potentially to protect whatever's going on here. You know, we've only had one fractal since the move above 50. So one thing I like to do is just bump it down a time frame. So you can go to the 12 hour. You can quickly visually backtest how noisy has this been. Well, from 43 to 50, we got 0 trailing stop losses. Okay, that worked out. From 50 to 70, we had 4 trailing stop loss prints here. None of them have triggered yet. So that's fine. You know, you're trying to identify the speed of the market. This is where the subjectivity comes in, some experience comes in. But if I'm looking for a higher trailing stop loss, going to the 12 hour makes sense to me. So that brings your trailing stop loss to, I think it's around like 68-ish K, okay? You also get a new set of supports on the 12 hour that you can also use. This is highly dependent and subjective based on you if you're playing the home game. So you can say, maybe 56 is too low. What does the 12 hour look like? Okay, there's a stop loss there. There's a support here. There's a support here. Maybe we get a Kijun bounce on the 12 hour instead of the daily. Okay, maybe this goes to 60 instead of 56 on a breakdown. But the trailing stop loss gets you out up here at 67. And this is certainly something that I've been watching since 43 with a 2x leverage position that isn't super critical on, you know, getting liquidated or something like that. Not something that isn't super sensitive to sudden down moves, but we're getting to the point here where, yes, we're pushing all-time highs daily. Love it. I'm not nervous about holding, but I want to protect the downside, right? So if I can get out at 67 or whatever this level exactly is, potentially get back in at 60 or lower, I think that would be a great trade, great potential setup. Even though this market right now is very noisy, liquidity seems to be sloshing around. You've got issues on Bitfinex with a long closing there, a massive ARB to be closed there. Nothing's particularly bearish, but it's always a good idea to keep this in mind. All right, so let's do some backtesting. People love backtesting. They can't get enough of it. Every time I talk about anything, they're like, hey, how does it look on backtesting? So let's do it. Let's visually go through this with the cloud on the daily with William Fractals. This is how I would go through this. So in October 2020, I was on Twitter screaming, hey guys, this is a pretty big deal. Bullish TK cross, price above cloud. I think it's go time. This was after COVID. And this is really all I need to see to say, all right, I'm in. Let's do this. From then on out, we initiate the Williams Fractals, right, as a trailing stop loss. And you'll see throughout this trend, stop loss moves up, stop loss moves up, stop loss moves up. And on this day in mid-November, you're stopped out. When you get stopped out, the next thing to do is to put the bids on the Kijun. Now, in this specific case, and in many cases potentially, we don't actually retrace that far. This ends up being a run-of-the-mill Tenkin bounce, okay? So your other option, instead of waiting for a full Kijun bounce, is to use the Williams Fractals for re-entry if the Kijun isn't hit. And this is the daily, so this is happening super slow, right? So you get out mid-November, you get back in mid-December at a slightly higher level, but keep in mind, the trailing stop loss acts as downside protection. So if we are breaking daily trailing stop losses, usually that's a very good sign to take that. You know, usually you don't get a massive fake out on a daily trailing stop loss break. So you lose a little bit here based on stop loss and reentry, and you're back in, and then you get another trailing stop loss, trailing stop loss, trailing stop loss all the way up. Mid-January, a month later, you get stopped out. It's a nice little trade there. And what you actually do get that at that point in time is a Kijun bounce, right? So you get not one, not two, but 3 opportunities to re-enter on the Kijun there. Let's say you ignore that, right? You can get back in slightly higher, again, based on the Williams Fractals for re-entry. Then we're back in. Trailing stop loss, trailing stop loss, trailing stop loss, trailing stop loss, trailing stop loss. Mid-March, we get stopped out. And, I think you get the point. Eventually, it gets to the point where you're getting stopped out at the Kijun, and it doesn't really make much sense just based on the cloud of fractal system alone to re-enter. And then the ultimate nail in the coffin is the bearish TK cross. At that point, it's over, right? Now, let's say you got in at the Kijun at any point here. The other hard stop loss is always the cloud. The moment you close in the cloud on a daily, that's a stop loss. The moment you cross bearish on the TK cross, that also says get out. So there was lots of stuff screaming up here in the high 50s in 2021 to get out of the way. But this was a multi-quarter trend. This went almost to Q3 from Q4 2020. And there were only a few touch points here, right? Most of this is just hands off doing nothing. Most of this is just letting the system run. You can always take profit at any point. You can always take some off the table. You can look for divergences. You can look for chart patterns. But just based on these two things alone, you do pretty well at protecting your downside, right? This isn't about knowing where this is going to go on the upside. It's just protecting your downside till the very end, when accurately, this just says, okay, we're done. We're not getting back in anymore at this point. If we look at the price versus Kijun throughout that trend, you'll notice like 40% above the Kijun was kind of the point at which you're more likely to get the Kijun bounces. So it's always something to continue to monitor throughout the trend. Let's look at another example. This would be 2019, coming off of a brutal down move in 2018, a mega ascending triangle before the breakout here. But you get your breakout, it's go time. And this trend is actually cleaner than even 2020 because you get in here, and I remember this vividly because nobody thought this ascending triangle was real, aside from Ledger and myself. And I was looking to get out at the edge-to-edge move effectively. Meanwhile, the cloud is telling you, no, the trend's just starting, right? Okay, so let's say you get in here, bullish Kumo breakout, bullish TK cross, bullish cloud, trailing stop loss, up. And 2 months later, mid-June, you get stopped out, bids here immediately. Okay, that doesn't get hit on the Kijun, great. We get back in on the Williams Fractals here, and then you're just holding. Stop loss, trailing stop loss gets moved, and then you get a stop loss about a month later. And then when you start closing below the Kijun, that's usually not a good sign as well. So you can always be aggressive at getting back in, but you do kind of have to read the room a little, and then a few weeks later you get the bearish TK cross. You do get a semi-false signal here with an Adam and Eve price above cloud, kind of sort of bullish TK cross, but not really. So it does get kind of sloppy and choppy towards the end. So you do have to know a little bit about a little bit what's going on. If we're coming off of a multi-month bear move, we're probably going to have a decent up move, similar to what we've had in 23 and 24. If we're dipping into the cloud at the end of 2025, okay, we're probably pretty heavy up there. We're probably unlikely to recover. So just something to consider at that point in time. Again, you can use price versus Kijun, not necessarily as an expectation of mean reversion, but just asking yourself, what is the probability here that this needs to consolidate a little bit versus continuing? It's always just good to monitor what's going on with the math, right? A few other examples for ETH here specifically, almost identical. If ETH flattens out at around 4K, we will print a TKC clamp, a TK disequilibrium. The Kijun will remain somewhere around 3100. And if we're lucky, sometimes we get a chart pattern up here as well to hint at reversal. Similar to Bitcoin, this ETH Q4 move didn't really touch the Kijun until the end. You get one last hurrah out of this, but realistically, it's kind of just slop and chop relative to what you'd want or expect. We know that now. You didn't know that then, right? But that's why even if you're getting stopped out on this nonsense, you're getting back in immediately on the bullish TK cross. That always supersedes any stop loss, any fractal. Again, something I was screaming about when it was happening. Anytime you get a bullish TK cross the price above cloud, that is extremely bullish. It says the opportunity for higher is very likely. And you can see ETH has just been straight up since then. So at this point, we're about a month out from that. And price is starting to look a little bit more tired potentially, right? This isn't a bearish call. This isn't a guaranteed move. It's just like, you know what? If we do retrace, I think we're probably going to move down to 3,500 to 3,100 based on the cloud. Here's another backtesting example for ETH in 2020 and 2021. And sometimes you'll notice alts have worse liquidity, worse order book support. So at times they will tend to mean revert easier. So here's the breakout. Here's the bullish TK cross, game on, great. You do get a almost immediate mean reversion a few weeks later, but almost the whole time in this move, multiple months, almost 6 months, you're holding above the Kijun. You rarely get a daily close below the Kijun. If you turned on Fractals, you could see, there's plenty of additional re-entries up here. That's why I like the daily. The daily now is maybe similar to February 2021, where we are just way above the Tenkin and the Kijun back to ETH, way, way above the Tenkin and the Kijun. Like, yes, I know we're bullish, but this just gives me pause anytime I see something like that. Let's go back even further. This is ETH in 2017. Throughout this trend, you get a Kijun bounce fairly early. Again, Kumo breakout, bullish cloud, bullish TK cross, Kijun bounce, Kijun bounce, Kijun bounce, and then that's kind of it. This is a massive ascending triangle. You don't know it at the time, but when you're looking for re-entries, you're just waiting for the consolidation. And then the trend has a second go in late 2017, and you get multiple Kijun bounces until the very end, and it just collapses, right? So the cloud is always giving you levels. Now let's go to a legacy extreme. This is the legacy settings. This is NVIDIA. Since 2023, you had your complex inverted head and shoulders with a bullish TK cross, bullish Kumo breakout, bit of a false start in Q4 22, right? But the train doesn't leave without you if you're paying attention to the chart pattern and to the cloud. I would rather get stopped out 2, 3, 4 times and be in the trend than worrying about, oh man, I just entered, right? The cloud is continually trying to both simultaneously shove you into the market when the time is right and pull you out when the time just isn't right yet, okay? So if we look at NVIDIA 2023 to present, it holds above the Tenkin the entire time almost in 2023. Not until the very end in Q3 23 does that consolidation start, right? So if you're using these settings on the daily, you don't want to just hope for a Kijun bounce the entire time. You're missing out on months of a move. You're missing out on a 3, 4, 5x, whatever this was on NVIDIA at the time. So the most important re-entries are always post-accumulation bullish TK cross, price above the cloud. All right, even at 450, 470, I think many people agreed that price is crazy, right? Even I was talking about a head and shoulders up here, which never broke down. We never broke below the cloud. I actually took a NVDS short position in the NVIDIA ETF, stopped myself out. But my leak here was I didn't re-enter on the long side when I should have. In any event, even on this recent move, we've held far above the Tenkin. Only one Tenkin bounce. I mean, that's how crazy this move has been on the daily. And certainly not a Kijun bounce. But here, NVIDIA, just like Ethereum, is pointing to TK disequilibrium, a support at probably around 700. And you'll notice at this highest point up here, price was significantly above that mean. And it's just math at that point, it's just math. Lastly, here we'll talk about the S&P ETF, the SPY. Similar vibe recently since 2023 in that we really haven't had a Kijun bounce intra-trend. So markets have been trending extremely strongly over the past couple of years. And this most recent trend is particularly impressive because it has also held far above the blue line there. The Tenkin currently giving you supports at 492 and 505. Once again, perfect entry on the Kumo breakout. This was a broader cup and handle, and the rest has just been history. So if I'm expecting a pullback, if I'm looking for bids, if I'm looking for places to get into the market, the safest place is always going to be the mean reversion level. The question you have to ask yourself is, how likely is it to see continuation versus a pullback? What are the broader market conditions here? And is there anything else that could potentially tip this over? We've got RSI bear div. We've got maybe a rising wedge channel thing going on up here. But as far as actionability, the cloud, the Williams Fractals, that is always there to help guide you throughout a trend. And again, it keeps you in. If you need a reminder, let's go back to 2020. This was months. This was a marathon. Remember that. It's a marathon. Most of the time you're doing nothing. Most of the time there is nothing to do. And maybe you're getting a little concerned at the extremes. Maybe you're looking for levels to get back in. But generally, throughout a trend, you let the market do its thing. That's all I have for this one. Like, dislike, comment, share, subscribe, and happy trading.